When you're buying a home, it's easy to fixate on the price tag you see on the listing. But here's a harsh truth. That number is just the beginning. Many first-time buyers assume that if they can afford the purchase price, they're all set. Think again. In reality, the total cost of owning a home often includes many hidden expenses that can easily add up to 10 to 15% more than the purchase price. For example, if you buy a $300,000 house, you could be looking at an extra $30,000 to $45,000 in costs that you probably didn't anticipate. When it comes to buying a home, most people are aware that a down payment is required, often somewhere between 3% and 20% of the home's purchase price. For example, on a $300,000 home, this could mean saving anywhere from $9,000 to $60,000 just up front. However, what many buyers don't fully realize is that the down payment is only part of the upfront financial commitment. Equally important, and sometimes overlooked, are the closing costs, which can add a significant amount to your initial expenses. Closing costs include a variety of fees that are charged when the sale of your home is finalized. These can include appraisal fees, which pay for a professional assessment of your home's market value, title insurance, which protects you from potential legal issues with the property's ownership, lender fees for processing your mortgage, inspection fees to check for any hidden problems in the house, and attorney fees if you're required or choose to have legal representation. All these fees together can add up quickly, typically ranging from 2% to 3% of the purchase price. So on a $300,000 home, expect to pay between $6,000 and $9,000 in closing costs alone. What's tricky is that these fees aren't always clearly disclosed up front, and they vary depending on your state, the lender, and the specific property. Sometimes these extra costs can catch buyers by surprise, leading to financial stress right before moving day. This is why it's crucial not just to save for the down payment, but also to budget carefully for closing costs. Being financially prepared for these additional expenses ensures you won't face last-minute delays, or worse, risk losing your dream home because you couldn't cover these hidden fees. Once you've handled the down payment and closing costs, there are ongoing expenses that often fly under the radar, but have a big impact on your monthly budget, namely property taxes and homeowners insurance. Property taxes are local government taxes based on your home's assessed value, and they can vary widely depending on where you live. These taxes typically get added to your monthly mortgage payment, sometimes in the form of an escrow account managed by your lender. For many homeowners, property taxes can add hundreds of dollars a month to their bills. For example, if you buy a $300,000 home with an annual property tax rate of 1.2%, that's $3,600 a year, or about $300 a month extra on top of your mortgage principal and interest. One important thing to know is that property taxes are not fixed. They can increase over time. As your home's value rises or local governments adjust their rates, your tax bill can grow, sometimes significantly, which means your monthly payments will go up. This unpredictability can make it challenging to budget long-term. Alongside property taxes, homeowners insurance is another ongoing cost that's mandatory for most mortgages. This insurance protects your property against damage from fire, storms, theft, and other risks. However, insurance premiums can vary dramatically based on your location, the home's age and condition, and the coverage level you choose. For instance, living in an area prone to hurricanes or floods can raise your premiums substantially. Combined property taxes and homeowners insurance often add hundreds of dollars to your monthly mortgage payment, a cost that many first-time buyers don't anticipate fully when calculating their affordability. Understanding these expenses upfront is crucial for planning a realistic homeownership budget and avoiding financial surprises down the road. Owning a home comes with a lot of perks, but it also means taking on ongoing maintenance and repair responsibilities that renters usually don't have to worry about. Whether it's routine lawn care, servicing your HVAC system, fixing plumbing issues, or replacing a worn-out roof, these costs can add up quickly. According to studies, the average homeowner spends between 1% and 3% of their home's value annually on maintenance alone. So if your home is worth $300,000, you should expect to spend anywhere from $3,000 to $9,000 each year just to keep everything in good working order. Beyond regular upkeep, unexpected repairs can hit hard. Imagine facing a broken furnace in the middle of winter or discovering a leaky roof after a heavy storm. These emergencies can be costly and stressful if you're not financially prepared. That's why it's essential to build a dedicated emergency fund for home repairs, ideally setting aside a few $100s each month, so you're never caught off guard by these hidden expenses. In addition to maintenance, homeowners also need to budget for utility costs that often run higher than what renters experience. When you rent, many utilities, such as water, trash removal, and sometimes even heating or electricity, might be included in your rent or shared with other tenants. But as a homeowner, you're responsible for all these bills. Electricity, water, gas, sewer fees, and trash removal can collectively add hundreds of dollars each month to your expenses. Furthermore, if your home is part of a homeowners association, HOA, there are usually monthly or annual HOA fees to consider. These fees typically cover services like landscaping, common area maintenance, security, and sometimes even utilities or amenities like a pool or gym. Unfortunately, many buyers overlook these recurring costs during their initial budgeting, which can lead to unexpected financial pressure after moving in. Understanding these ongoing expenses up front will help you create a more accurate picture of what it really costs to own your home. Preparing for home ownership means looking beyond the sticker price and factoring in all the hidden costs that come with buying and maintaining a home. One practical step is to ask your lender and realtor for a detailed breakdown of all upfront and ongoing expenses before you commit. This should include estimated closing costs, property taxes, insurance premiums, and any HOA fees. Don't hesitate to ask for clarity on anything that's unclear. Knowing exactly what you're signing up for is crucial. Another essential recommendation is to build a robust emergency fund that covers at least 3 to 6 months of your total living expenses, including mortgage payments, utilities, and maintenance costs. This fund acts as a financial safety net for unexpected repairs or income disruptions, giving you peace of mind. Lastly, consulting professionals like certified home inspectors before finalizing the purchase can save you from costly surprises. Inspectors can identify potential issues with the roof, foundation, plumbing, or electrical systems, allowing you to negotiate repairs or price adjustments before buying. By doing this homework up front, you position yourself for a smoother, more financially secure home ownership journey. Buying a home is one of the biggest financial commitments most people make in their lifetime. But it's important to remember that the price on the listing is just the beginning. Beyond the down payment and mortgage, there are many hidden costs that often catch buyers off guard. Things like closing costs, property taxes, homeowners insurance, ongoing maintenance, unexpected repairs, utility bills, and potential HOA fees. These expenses aren't just minor add-ons. They can add up to thousands of dollars each year, significantly impacting your monthly budget and long-term financial health. That's why it's crucial to plan ahead and create a realistic budget that includes all these costs. Doing so helps you avoid the common pitfall of underestimating how much homeownership truly costs and prevents the stress of being financially stretched after you move in. Remember, it's not just about affording the home, it's about sustaining ownership comfortably without sacrificing your lifestyle or emergency savings. So if you're planning to buy a home, take the time now to get a full picture of the costs involved. Talk to professionals, gather detailed estimates, and most importantly, build an emergency fund to protect yourself against unexpected expenses. With proper preparation, you can turn the dream of home ownership into a stable and rewarding reality.